Picture this. You're staring at a stock. The chart looks exciting. The price is moving. Your finger hovers over the buy button. And then a thought flashes through your mind. It's a whisper, so fast you almost don't notice it. You shrug it off. It's fine, you tell yourself. Everyone else is buying. But that thought, that quiet whisper, is the one that determines whether you profit or pay. We're going to explore that exact thought because it's more powerful and more expensive than you realize. It happens in a fraction of a second. The stock is climbing, the market sentiment feels electric, and your mind whispers, "This is the one, I can't miss it." It's not a rational decision, it's a feeling, a rush, a pull. And because it feels so automatic, you mistake it for intuition, for insight. But it's a decision made before your conscious mind has even fully engaged. So what's really happening? Your brain is running on ancient software. First, there's the fear of missing out, or FOMO. We are wired to fear missing an opportunity far more than we fear losing money. That whisper in your mind is often just FOMO in disguise, pushing you to act before you can think. Then, your brain immediately looks for evidence that supports the impulse. This is confirmation bias. You start noticing all the positive headlines and ignoring the warnings. Suddenly, the stock looks like a certainty. This thought isn't rational. It's an emotional instinct, amplified by biases that evolved over millennia to help us survive on the savannah, not navigate the stock market. And here's how it plays out. The impulsive investor sees the stock spike and buys instantly. Weeks later, the price collapses, panic sets in. They sell at a loss. The financial consequences are clear. Impulsive decisions lead to repeated losses. Small regrets compound into major setbacks. Emotionally, the cost is worse. Anxiety, self-blame, and a loss of confidence that quietly erodes your future performance. This happens because that whisper is so seductive. It promises instant relevance. It feels like being in control, like you're ahead of the crowd. But the emotional relief of acting now comes at the expense of rational decision-making. Comfort has a price, and in the markets, that price compounds faster than interest. So, how do you fight it? Disciplined investors don't let whispers decide their fate. They pause, they question, they treat that impulse as a signal to investigate, not an instruction to follow. Before they act, they ask, what assumptions am I making? Am I responding to facts or to feelings? You can train yourself to do this. The next time you feel that pull, just pause the click. Take one single breath. Ask yourself, why am I really buying this? What could go wrong? Keep a checklist or a journal. Normalize the feeling of discomfort without acting on it. The goal isn't to eliminate impulses, it's to recognize the ones that cost you money before they take hold. That fleeting thought, quiet, seductive, almost invisible, enters right before you click buy. It feels like wisdom, it feels like control. But unchecked, it erodes wealth, patience, and confidence, silently, one trade at a time. The next time you feel it, pause, watch it, question it. Because in investing, the most expensive mistakes are never made by accident. They're made by the thoughts you let whisper first.